We always wanted to do a video like the ones we see on the internet of people, mystery person off camera, throwing in random questions to someone while they answer back, and so that's precisely what we're going to do today. I'm Arthur Petropoulos, managing partner here at Hillview Partners. We're a middle market, lower middle market, M&A and capital advisory firm helping companies, executives, owners generating $1 million to $10 million a year in EBITDA or pre-tax profit, sell, or find capital for their companies. So, without further ado, question number one, mystery person, is:
what does an investment banker do?
Investment banker does multiple things, but you can really break it down into two primary categories, one of being the buy side and one of being a sell side. So a buy side investment banker would help a company find targets to acquire. And so you'll see private equity firms, large strategic companies will often engage buy-side investment bankers to find them deals to buy. Sell-side investment bankers, of which Hillview is one, works with companies, executives, owners, to either sell their businesses or secure capital. Now, there are companies that do both, but from our perspective, we want to avoid all conflicts and really focus in on being the experts purely in what we do. So we work entirely on the sell side of helping companies sell, helping companies find capital. Now, there's a whole lot of complexion, mystery person, relative to when you get into stocks, bonds, public market-oriented things, but as it pertains to the middle market, low middle market, on the private side, you can really break it down into buy side, sell side, people helping people buy things, people helping people sell things or find capital. Question number two.
If I need these services, how do I get started?
That's a good question. So you could use the Google to just say, I want to sell my company, I want to find capital. And you'll see, obviously, it's like any other industry, you're going to see lots of companies that are paying for ad placement, for Google placement, for AdWords, and that doesn't necessarily mean they're the best by any means. I actually markedly make the argument that those that come up first are not the best. But it's one way of looking for it. A lot of relationship-driven businesses, oftentimes accountants and attorneys, have relationships in this space as well, and so that's always a good resource to say, hey, have you worked with anybody who does this? And obviously, LinkedIn becoming much more burgeoning presence of how people find professionals, find services, and that's where we do a lot of our presence. And so I'd say look at the same places you look for attorneys, for accountants, for other professionals, or go on LinkedIn and see who makes the best videos about it, right? Jokes aside, though, obviously we work with lots of different companies all across the world, and it's a decision you'll have to make intelligently, and at the same time, really turn over a lot of rocks.
What should I look for?
I would say the key differentiator in investment banking firms, M&A advisors, things of that nature is look for, if we had to boil it down, there's a lot of different variables, but if there was one thing to look for a proactive, not a reactive process. And so there's a lot of people that are saying, we're just going to put it on a mailing list, puke it out to the universe, and pray for the phone to ring. Find the parties that say, as we like to say, it's an extraction process. Here's the steps that we do to get it in front of the right people, in front of the right parties, in the right manner, and to pull the offers from the market, not wait for things. And so if you're talking to different parties relative to either selling your company, to securing capital, if you're seeking an investment banker, the main differentiator, or if there's one thing that you want to tick the box with whoever you go with, it's who is being proactive, not reactive. Next question.
Do you need to be local?
No. So that's a bit of a misnomer, and I think that has some historical precedence in that investment bankers were local and that there were regional investment bankers, but to some extent you really need to work with someone who's national, international, because the buying base is national, is international. You could have a widget manufacturing company in Washington State and it gets bought by a Japanese multi-country global enterprise. Or conversely, it could be a private equity firm from Florida, Texas, California buying a New England company or a company in Kansas or Oklahoma. And so, no, I mean, to some extent, you really want someone who has that kind of presence because the market for middle market or lower middle market deals has become a global market. And so you want someone who has equal access to it. If you have the responsiveness to the firm, if you have their attention, if they are providing the services that you need, you'd rather have someone that has that kind of a global presence. Again, so long as you have the line of communication that you need.
What makes for a successful sale or finding of capital?
To boil this down to a 30-second audio clip, right? Jokes aside, we'd say it's the right narrative to the right audience with the right process. And so narrative being, tell me about this company. How do the people, process, and products work? Within the processes, how does sales, fulfillment, and operations work? And if you can spell that narrative out, and what is the competitive, durable competitive advantage, the edge, crystallized reason why this company does not compete on commodity pricing, does not compete on purely just scale. If you can spell that narrative out and then have the right parties to reach out to, running the spectrum from large strategics down through large private equity, middle market private equity, family offices, search funds, high net worth individuals, independent sponsors, if you can run that whole gamut on the side of who you're reaching out to, and then you have a process where you're actually lining everybody up step by step, side by side, so you have a true horse race, for lack of a more eloquent phrasing, that's how you extract the best value. So really 3 prongs relative to getting the best results: the right narrative, the right audience, the right process.
What questions should I ask?
So if you're meeting with a banker and you're trying to evaluate it, you should understand their approach to business, right? And so that goes back to our proactive versus reactive. How do they actually market the companies? How do they get the results? 2, track record. How many deals have they done? What's the aggregate amount of deal value? We've done $1 billion of deals here at Hillview Partners. You want to ask, how much iterations, how many reps have you done before you started the firm, during the firm? What is the track record of the collective business? And then you want to understand if they have an expertise. Now, the expertise is where it gets a little bit, I think there's a misnomer that if you run a company that does software for bill collections in healthcare, that you want someone that's only doing that. And in reality, if it's a certain size of business, call it sub $10 million of EBITDA, there's not going to be a firm that only does those things. And so you really want to say, well, who's done a lot in the, call it, vertically focused software space? And not just, again, industry matters, but what matters more in the middle market and low middle market is who's done enough deals of that size and ownership complexion. And so what I mean by that is if you went to a giant company that does $1 billion deals all day with software, but you have a software company that makes $3 million a year in EBITDA, they're not going to have the right audience for you. They're not going to have people that want to look at it. If you went to, however, a firm like ours who does 1 to 10 million EBITDA deals all day, every day, and perhaps 15 to 20%, if you will, of our overall deal volume over time has been in the software space, that would get much better results because we know who to position these things in front of. We know how to position them, what angles to take, how to work through the deal. Because again, the size and complexion is much more a driver of how the process works, what the terms are, what's market, what's not market. So again, if you're talking to someone and you're asking questions, you'd say, what's your process to make sure it's a proactive process? What's your track record and expertise in terms of what have you done, what have you worked with? And then I'd say lastly, what's the cost structure of it? We won't get into ours on this video. Obviously, happy to discuss parties as we chat with them. But make sure there's not sneaky provisions in there. Make sure you're not signing up for a 2-year term with somebody where you thought it was going to be something that you could terminate all the time. I will say, at Hillview, all our clients have the right to terminate our engagements at any point for any reason if they don't feel like they're getting adequate value. And thank the good Lord that does not happen, and we work very hard to not let that happen. But what I'd say is, if you sign up with somebody and they say, well, we're really going to work hard for you, but just to ensure that we're going to lock you into 2 years here, well, is that putting someone's money where their mouth is? Secondly, another thing to think about is called must-take provisions. If someone were to get you an offer for a deal and say, hey, we got you X dollars and now you need to either take the offer or pay us as if you took the offer, is that fair? Because from our perspective, you say, if a deal is not compelling to do, the client's not going to do it, and therefore you should not get paid, right? All things need to be congruent, aligned. And so, topic for a video of another day, but if you're talking to someone, questions to ask about approach, expertise, track record, cost structure, that's a really good place to start. Next question, mystery person.
How much of the process are you involved in?
Now, the right answer to that should be all of it. And people think a banker comes in just to put materials together, just to find counterparties that would be interested. But from our perspective, we are working in the trenches side by side with our clients from the day that they decide that they want to sell a business until the deal is completed. And so that starts with the preparation of materials, the counterparty research, the outreach, the follow-up, the sourcing of additional questions, the Zoom meetings, the phone calls, everything in between, getting the offers, negotiating the offers, agreeing on an offer, working through diligence, shepherding the accounting, quality of earnings, the legal due diligence in every step of the way. But a true banker should be your person that you can call anytime, day or night, our firm, to say, hey, what about this, what about that? And that would work from day one to, in our case, day 180, but my sense is that might be an answer to a different question. But nonetheless, that's the answer to that, all of it.
Okay, final question for the day. When do you stop being involved?
The answer to that is never. And what we mean by that is we want to get the deal to a closing. And that is the time where, from a pragmatic perspective, once the deal is closed, once wires are dispersed, once capital is dispersed, then yes, that is a true ending of that particular transaction. But with all of our clients, and I'd say we still talk to most, if not all, regularly, because some of them are looking at new businesses, some are chatting with other people who are looking to sell their companies, and then there's some where you sell 80% of the company, and then there's 20% that gets owned and rolled forward, and there's an active involvement with that, and chatting with the private equity firm that may have bought them, or chatting with your client to say, hey, are the earnouts getting paid? We're making sure everything's on a good footing. But we really say this, and everybody says it in business, and it sounds somewhat hackneyed and trite, but these are lifelong relationships. These are some of the most kind of charged, I don't want to say stressed, but potent periods of time where you've worked your whole life to build this business. You now want to sell this business. You don't want someone who's flippant about it. And yeah, part of what makes this job and running this business enjoyable is that these are lifelong bonds after that, because this is one of the most meaningful milestones in somebody's life. And for better or worse, Arthur's in that picture, right? Or Hillview's in that picture. We don't want it to be when you look at your old wedding pictures and there's someone's ex-boyfriend or girlfriend that everyone hated, and you say, boy, I wish we could get rid of that person from the picture, right? We want to be the person that you say, they made it happen. They made the magic happen here. They enhanced the outcome far better than we could have imagined. And that's when I think we feel the most fulfillment. And really, that's when I suppose our involvement starts to wane. But nonetheless, thank you, mystery person, for all of the questions for today. We're going to do a part 2 of this later on in the week. But for now, that's what we have. So we'll continue our frequently asked questions of investment banker part 2 shortly. I hope the week's getting off to a good start for everyone. Keep pushing forward. God bless. We'll see you next time.